try and start this morning by unifying two themes that have come out of previous sessions. And one was yesterday when we were talking about the challenges facing the industry. The thing that came out very clearly is that the chief challenge is what do we do about the sales process? And I think what you heard this morning in the prior session was Ryan suggesting that part of the answer to that question is leveraging the rental program more. And so what I'm going to talk about this morning is if you accept the premise that rentals can be part of your sales program and generate cash flow for your property, what next? What do you need to do to execute once you've made the decision to push on that rental program? Our company, LeisureLink, focuses very much in that arena and in broad distribution. And I want to talk just a little bit about what the critical success factors are for your property in these rental channels. First of all, who are we? And as you can see from this, we not only work in the timeshare industry, but we also work with hotels and with vacation rental properties. About a third to 40% of our business is timeshare. We do business with people you would recognize, some companies like Grand Crown, Club Regina, some smaller players like Starwood. And so your industry has been very, very good to our company, and we spent a lot of time working on it. As I said, in aggregate, 1,500 or so properties in these various channels. Well, which channels are we talking about? All of them. If you go to Orbitz, let's say, and you search on Branson, Missouri, you will see Grand Crown properties there that are powered by our technology. Likewise, if you look at a Club Regina property, like say the one in Palm Springs, you will see the same thing. It'll be listed high, as Ryan was talking about, with good placement, and we're the technology that powers that. So that's why we're talking about this today. The critical success factors we're talking about for these channels are, one, broad distribution, and a very simple goal here. All of these channels are very proud of their individual characteristics, their clever marketing, William Shatner doing his karate chop, all well and good. But from our perspective as a group, you don't care where that consumer books. You just care that they book at the right price, and they come to your property and eventually buy. And so you want very, very broad distribution. And there's an old joke that someone asks a famous person, how much money is enough money? And this wealthy old person's reply was, just a little bit more. And that's the way we feel about distribution. How much distribution is enough? Just a little bit more than we had yesterday would be a great place to start. So I'll talk in some detail about that. I'll also talk really to the point that the gentleman from Cabo San Lucas raised, and that is, what about your pricing in this arena? Number one, does your pricing support your value proposition? Do we have the correct price and the same price across all these channels? And are we correctly responding to changes in the market? So we'll spend a little bit of time on each of those subjects. But let me start with why you should care, because that's really the most important thing. And at the end of the day, there are two answers here, cash flow and cash flow, followed by sales. I guess that's three answers. But these channels can produce significant volumes. They produce guests that will tour, that will convert, and have substantial VPGs. And the interesting part is, as you're looking at these VPG numbers, this is not a guest that you paid an OPC to bring in. This is a guest who is paying you a full market rate to be in your property. So very different, and they convert absolutely beautifully. And again, the keys to success here are being everywhere the consumer shops and having the right price. Well, what about these various distribution arenas? There are really three major ones to be thinking about, and I've tried to scale the opportunities for you a bit. The traditional one that everyone thinks of is the GDS arena. And this is the systems like Sabre and others that power what travel agents do. And it may surprise some of you that there are still 500,000 travel agents in business. And they tend to send you longer stays, a little lower volume, but when someone's going to book a 10-day stay, they want to talk to a human being, not book on Orbitz, particularly if it's a beautiful property in this area that has a relatively high average daily rate. So that can be very powerful in terms of producing longer stays, typically not huge volumes unless you spend a lot of effort marketing to those travel agents. Where the volume comes from are the OTA channels that we've been talking about before. Something like 55 to 60 million consumers in a busy month will hit one of these channels. And it is an incredible source of brand advertising for you. If you were in these channels and you never booked a thing, but some decent sized fraction of those 55 million people saw your brand and got intrigued with your resort, and many of them may call you direct and not book through these channels, very valuable marketing opportunity. The last piece up here are various and sundry wholesalers. These tend to be market specific. So for example, Southwest, which is very important in parts of North America, doesn't mean anything down here in the Caribbean. But you might have a local airline that does. And so you want to tune that part of your distribution network to be dealing with the partners that work the best for you. And again, you have the opportunity here to expose your brand to millions upon millions of consumers in a very short period of time at practically zero marginal cost. You have an opportunity to drive large amounts of revenue because these channels will book in terrific volume if you get the pricing right. And even though you can't do hook tours through these channels, people come and stay at your resort and they simply fall in love. And there is no better sales tool. I mean, given the caliber of properties that are represented here, there's no better sales tool than having somebody on property actually experiencing it, who has paid a market rate and therefore understands the value of the property. Well, assuming you can put yourself in all of these channels, and obviously you can by a variety of methods, what does it take to win in these channels? Well, one of the things that we have discovered over time, and I will say painfully at times, is that your pricing has to be correct. And there are really two dimensions to that. You have to have the same price in every one of these channels. And you have to think about your distribution partners for just a minute. Remember, they essentially own storefronts. They own storefronts on the internet. And they want to know that you're not giving a better price to the other store. Surprise, surprise, if they catch you doing that, you will fall down in the listings and you won't book in their channel. So price parity, absolutely critical across these channels. The other thing you discover, and I know this looks like the stock market chart for the last week, this is actually prices, real prices from the Palm Springs market a little earlier last year. And the reason I put this up is not to have you read every note on the slide, but rather to point out that these prices are extremely dynamic. And in virtually every market you take a look at, you will find a property like this of scale. It might be branded, it might not be. They typically have a very sophisticated revenue management team. There will be six-figure people worrying over charts, wondering what the pricing should be like for Atlantis. And it's going to vary wildly with seasonality, with demand, and with the state of their inventory. And it's going to affect you because it's going to drive the market price. And the point of this chart really is to point out to you that there will be times when the market price may move down when you don't expect it. And if it falls below where your price is and you do nothing, you will sell nothing. And I have to say, approaching this, I have an analytic background, as you can probably tell. I get geeky pretty fast. But I approached this and I thought, gee, if we're a little bit off the market, sales will probably fall just a little bit. Revenues will fall just a little bit. Well, no. It turns out that it's much more like an on-off switch. If you're more than a few dollars out of market, you will book Zippo. And contrary-wise, you'll often run into people who are saying, gee, I'm thrilled. I've sold out of all my rental inventory. It went like hotcakes. We must have really gotten this right. What you've probably done is underpriced it if it's flown off the shelves that quickly. The challenge here is it's a lot of work to manage this on a day-to-day basis. And so we've actually built a system that drives this for you that uses airline-style pricing. And I know everyone in this room has had this experience. You sat next to someone on the plane who bought the ticket that you just paid $1,200 for $150 3 weeks early. And it's not just that they were early, is that they bought at a time when the airline had a lot of inventory and had to move it. And they priced accordingly. If you're like me and you book at the last minute, there's 4 seats left, guess what? They're going to hold you up because someone is going to walk up to that counter and want those last seats. They know it, you know it, so you pay up. This is no different. It's a very, very dynamic market. And I think the big challenge here is to drive enough volume and not leave money on the table. And that can be accomplished by automation and done pretty cheaply and pretty easily at the end of the day. Well, if you get all those things right, how important is it? And we've spent a lot of time studying this over the last year or two. And on average, the clients that we have that are using all of the best practices are seeing 70 to 80% year-over-year growth. in their rental programs. And it's a pretty powerful statement. You can see we have some players in each of the verticals in which we work that are doing dramatically better than that. And again, there are two drivers that make this go. One is broad distribution, being everywhere the consumer ever wants to look, giving your brand maximum exposure. And the other is pricing correctly in line with the market. And let me just touch one more time on the pricing, because one of the things we've found has been very interesting to me. Pricing is a very emotional issue. You've invested your life, your money, your time in building a beautiful property. Naturally, you're proud of it. Naturally, you want the highest price. Well, for purposes of rentals, the way to think about this is the market tells you what the price is. Now, you may command a premium over the market because you've got more bedrooms, you've got nicer facilities, what have you, or you may have an older property and perhaps you're at a slight discount to the market, but your price is fundamentally the market price. And so your choice as a manager is, do I care to participate at that price or not? You know, I'm not going to stand here and tell you that if the market prices suddenly drop to some ridiculously low level, that you ought to continue participating. Because I think for this industry, it's a very real question. And there may be times when you say, I simply don't want to play when the market rate is at that level. And there'll be other times when there's an opportunity to price up rather dramatically. You know, a large group has come into town, there's an event happening, those sorts of things. You can get dramatic price swings for any given date. But the real question to you is, take away the emotion, look at that market pricing. It's very much like the stock market. If you have a large investment in a company, obviously you're not happy if the market's down, but you're going to choose not to sell because the market's down. This is really no different. You want to see what the benchmark price is and price accordingly against the strategy you have for your property and the state of your inventory. And again, it's exactly the same thing that the airlines do, and you can bring this same kind of powerful product and process to your resort to drive that rental program and drive the revenues associated with it. Any questions from anybody before I move on? Very good. I am going to turn it over to Frank to talk to you about the insurance perspective.